Hey, what is happening, Bulls and Bears? Back with another dose of economic reality. It is Monday, June 6th, 2022. In our last report, we talked about how the masses were waking up with the levels of debt that people are buried in, the rising rates, the rising costs. Everywhere you look, it's beginning to have people look into how the economy really works, and that's a good thing. It's a bad thing that people are going broke like never before. Savings now has plunged to a 10 plus year low. Consumers are running out of money. They're depleting their savings. They're depleting their savings accounts. People are cashing out of their 401k to try to keep up with everything right now. Not a good thing on the consumer side. And a lot more storm clouds are ahead, but it's not just channels like mine anymore. Not only are people waking up, but it's also the big media outlets. There used to be this narrative that the economy was still good. They would only talk about the unemployment number and other kind of trivial numbers that don't really paint a real picture of the real economy. But now we're seeing articles like this. Here's one out of AP. Inflation divide. The wealthy splurge while the poorest pull back. And it talks in here about, of course, the rising cost of living, the rising cost of food, but the expiration of the stimulus checks. If it were not for all of those rescue programs in 2020, 2021, if it weren't for the cancellation of the rents, the freezing of the foreclosures, for the freezing of all the loans that were frozen, including student loans and other types of loans, if it were not for all the cancellation, temporary cancellation of the utility bills, what we're seeing right now unfolding would have unfolded back then. The problem is they don't have any reason now to send out more stimulus checks. Of course, the reason would be the fact that people are going broke like never before, but they need an emergency, sort of another shutdown situation that would really justify sending out all these stimulus checks. So on one hand, they've got this ultra low unemployment number, which is fake and phony because it doesn't include 100 million people out of the labor force. But how can they justify that, sending out stimulus checks with this other number out there that people are looking at and that the news is talking about, saying the economy's great? So they're kind of stuck in a hard spot, kind of like the fight for inflation, or the fight to bring down inflation, but at the same time they have to pull back the monetary stimulus and the QE. And we do see the Fed now, they are unwinding their balance sheet. So they are doing what they said they're going to do, not as quickly as they said they're going to do. We were originally going to see this back in March. Here we are early June, and we're starting to see this. But let's take a look at the balance sheet. It is happening very slowly, but it is happening. And if we look here at the balance sheet, total assets held on the Fed's balance sheet over a long-term chart, of course, we see up and away here in the last 2 years. But zoom in 1 year, and we see a pattern here to the far right, which shows us it's now being reduced, as they said. So we went from 8.965 trillion back in April 13th. Now we're down to, as of June 1st, $8.91 trillion. So just under 9 trillion, but a very slow decline of the balance sheet. And I believe that they know with the levels of debt right now, they have to be very, very careful, ultra careful with the unwinding of this balance sheet, with the interest rate increases. They're talking about another half-point rate hike in the next meeting and the meeting after that. We'll have to see how that plays out. But also another article that's very disturbing to think about, for most people, but it underscores a lot of what we talk about here on this channel. And this was originally put out by the Birch Gold Group, and then put out again by Alt Markets. And it reads as follows: inflation will price many Americans out of housing and into homelessness. Yes, so the people that didn't keep their credit scores up, and the people that spent all their savings, that don't own a home right now, people that are looking to buy a home, a lot of people are not going to be able to buy a house even if there is a price correction. So you get a housing price correction, and the cost of living is so high that most middle class people are still not going to be able to buy a house, so they're still going to be stuck renting, and the people that already have money will be able to scoop up the deals, right? So even if there is a housing correction, and no, I don't think there's going to be a housing market crash. Even if there is a correction and a decline, which I think there will be a decline, especially in some cities like Boise, Austin, some of the hotter markets, the coastal markets, Miami, you're still not going to see very many new homeowners. But what you will see is a lot more of the people that are already doing pretty well buying second homes, buying third homes. You're going to see big investment firms coming in and buying thousands of homes on any price dip. And unfortunately, most middle class people are going to be in such high levels of debt, and their credit's going to be so banged up from late payments and taking out loans and debt consolidation loans and cash advances and payday loans just to get by. A lot of these people are not going to be able to buy a home, and not only that, you're going to see just worsening homelessness, and it's going to be a sad thing to see unwind. But we've been talking about it here for a while, and things are continuing in that direction now. Even mainstream articles and others are sounding, very echoing what we've been talking about here for a little bit now. And I think one thing to do to possibly prepare for this, and I'm not, putting any bad anticipations out there for anyone, but just in case, you might want to buckle up, and you might want to get maybe a motorhome, a second place to live, maybe a camper in case you do have to find an alternate housing situation. Basically motorhomes, campers. A lot of people bought those for recreational use to go camping, but a lot more people now than ever before, as far as I could see, more people than ever before are buying them for just a place to live, for an emergency, one, in case something bad does happen where they get evicted or lose their home, just as kind of a backup, or two, maybe they're already in that situation right now where they're having to choose between buying food and paying their housing payment. So not a good thing, but not just my opinion now. A lot of people are saying that this is what's headed our direction. I hope this is not correct. I hope this is not what happens, but as far as I can see, this is the direction we're still headed. Inflation will price many Americans out of housing and into homelessness. Please let me know what you think about all this down in the comments, guys. And just to sum it up, here's kind of the phrasing out of this article. When housing finally does deflate, it will only be under drastic economic instability. By that time, people will have much bigger concerns. They won't be able to afford food. They won't be able to afford their car payment. They won't be able to keep paying other bills that they'll need, their utility bills. So by then, there's going to be such massive instability, according to Brandon Smith over at Birch Gold Group, that we're going to see a surge in homelessness. Not a fun thing to see happen here in the U.S., but it's already been happening if you look at the tent cities, and if you look at many of the downtown areas. It shouldn't be shocking or any surprise to anyone that this is going to continue to get worse as this environment, this economic environment, these rising prices, and this economic instability continues to worsen. Also, let's look and see who else had their hand in the cookie jar with the health crisis relief funds, these PPP loans. Real estate agents got $3.9 billion in relief funds from the PPP loans. Remember the PPP loan program, the Paycheck Protection Program? And it's no secret that real estate agents have been pretty much making out like bandits with these home prices and this housing price boom, this housing bubble, with their commissions. Not all of them, but the ones that are actually have homes in the pipeline, selling and buying homes. Listing agents and buyer's agents also. 3.9, nearly $4 billion in relief funds for real estate agents. So as you can see, the money that was dished out there to help people, really helped people the most that really didn't need the help, and helped people the least that really needed the help. Just the opposite of what should happen. But hey, what's new? Please let me know down in the comments. Thanks for being here for this report. Love y'all. Bye now. Peace.